Good day, it's Gene Inger. At the end of the New York lunch hour, we have a stock market that's holding pretty well. This is a just 2 days chart with a 5-minute bar that we normally look at. You can see the market action where it tried to dip a couple times this morning. This is pretty linear in terms of advancing. During the lunch hour, we held together pretty well. That argues for upward action afterwards. So even if we pull back here for a few minutes, I think we move higher. That was my forecast last night. I suggested you'd get turnaround and rallying in AEHR, in Soundhound, and you certainly do in both cases. It's not all that dramatic, impressive, or new highs. Soundhound is bordering on that. And as I mentioned a few minutes ago on a, I think it was a Twitter post, I just said, I need to see it get above the 420s at the end of the lunch hour, and we are. And then I think it can pop higher to the surprise and chagrin of those who were calling for lower. Because I think, I did hear when I was in the midst of things this morning, one of the analysts on television commenting, maybe it was just Pisani, I don't know, on CNBC, and he made a comment that everybody's looking at charts and playing indexes because it's impossible to get information really for most people on companies. A, I don't think that's true if you take the time to do due diligence. B, I generally have no information that's not public. You just have to dig for it and try to find it. And I think that's what I try to do to the extent I can. This is not like my old TV days or money management days when I had a staff of a number of people who could assist in that. So I've gone through some issues, so health-wise, as you know, in the last couple of years. So I'm trying to limit myself so I don't get too exposed, but to too much work and too many stocks to follow. But I've tried to point out that small caps were the place to be. That AI, space, certain aspects of medicine, maybe, but boy, is that tough. I tend to avoid it. Because it's so up and down and there's too much drama. But I think that the technology leaders are overdone. I think that the small caps have not really been in their own for some years. And I felt that the market made an inverse head and shoulders bottom last year. So I think that's important because many of the technicians and strategists that are still arguing the bearish case are overlooking the fact that stocks put in a low, and against a difficult time, they've managed to forge ahead over the course of this year to the chagrin of all those who've been fighting it all the way up. And now they say, well, now they still say, we're going to go into big trouble. Of course we may. You've got pain in the commercial real estate. The worst, I agree with Kyle Bass. I think Kyle used to look at my work. Maybe he still does. But I think Kyle is correct that you have defaults and problems ahead in some of the big REITs, especially on the commercial side. And I think some of the Airbnb games are on the residential side are even going to come to an end because you can't buy the property to rent out with these kinds of interest rates and the way some were playing the game. Much aside, they've had a lot of problems with people who have abused the privilege of renting what are often overpriced, used to be underpriced properties, and the prices have gone up because the ridiculous prices in some of the better hotel lines has allowed that to take place, I think. But in any event, it's interesting, it's bifurcated, and the important thing is something that I've urged all year, and that is don't short this market unless you're just scalping and hit and run, because it's not going to work. And now you have all these money managers arguing negatively, but from what I hear in chatter, what they're really trying to do is find stocks to buy. They make their money primarily on the upside, not on the downside, and I think that's important. I know a couple of you guys don't agree with me, and you're going to cite the many reasons to be bearish on the market, but sometimes the market defies what you might call logical analysis, and it doesn't have to be a bull trap or a bear trap. It can be a continuation pattern of a bifurcated market with the dispersion that we've talked about between the big caps and the small caps. And for example, you had the new home sales exploding higher for the month of May, up 20% year over year. People can't believe that with 7% mortgages. The builders are often having to underwrite that. You had the Conference Board confidence number come up in June with inflation and recession expectations dropping, almost plunging. And that is typical of a bullish construction, not a bearish one. Right now, the S&P is up 36 handles. The industrial average is up 166. The transports are up 380. The New York Composite is up 96. The breadth is 3-to-1 positive, 21.25 up, 691 down. The VIX is down 2/3 of a point, 1365. I thought it would slip today because my forecast was for a rally today. The Russell up 28 points. The 10-year yield is at 3.76. The 30 is at 3.84, and the dollar index is down 1/5 of a point. The bank index up 0.88. Bitcoin is up 425. I don't want to touch it. I actually think could be a vulnerable pattern getting structured. That looked like a short-term head and shoulders intraday, yeah, but that doesn't mean a whole lot. NASDAQ up 164, NDX up 188, and semiconductor index coming back up 81 points. And the oil index down 380, and crude oil down $1.33 at 68.21. Probably this is a floor area because this is where, again, they start buying for the Strategic Petroleum Reserve, and they should. I think that then if oil pops up to the upside, we'll see with drawdown figures from the EIA and so on in a day or two. And then we'll see whether we can get a rally in oil. And then if oil stocks pop up, that's going to help the index. GLD down 0.75, and silver is up 11 cents. Stronger oil and oil stocks is okay, even good for the market, as long as it doesn't get out of hand. The lower oil, however, helps the inflation argument. Amgen's down 186. Apple is up 235. That's a continuation pattern for Apple, which we hold long as a core ever since $57 a share split adjusted. I rarely mention that because it sounds ridiculous, but it's not ridiculous any more than our holding AMD, which is up $2 at 109 from $17 a share 4 years ago, pick of the year for 2019. And at that price range, I was in Berlin at IFA and met the developer of the Ryzen, and I was impressed. And stock was 32, and I said, if it falls a half to 16, and it did, we'll buy it. So 16, 17 was our buy zone, given 2 or 3 months in advance. I'm invited to I'm going to look at AEHR next, but I'm invited to IFA live again after the pandemic in Berlin this year again. I could go to Berlin, but I don't think I could take the physical stress and strain of it's not stress, but just the walking around. There's a rumor that I'm getting older. I'm sure it's just a rumor. Anyway, AEHR up 134 at 39.22. I'd like to see it close above 40. I don't know if it will, but notice it's only 300,000 shares, and you only have the big volume when it goes up. The sellers, I think the pros are the smart ones here. I think the sellers are the schmoes when they sell in weakness because it comes right back, A, and B, you're likely on the threshold of upgrades in both price targets, other than just Blair Company, but they haven't even done it. So I think you're going to get those upgrades. I'm thinking of a different stock. I think you're going to get those upgrades, and I think you're going to get news, announcements, sales, and I think the stock moves higher. Amazon's up 148. Boeing is up 206. Big Bear is a disappointment. It's up 4 cents at 232, but it won't be a disappointment if they get another major government contract, like from the Navy. Let's see what happens as the year goes on. Then there is tiny Black Sky, whose earnings, even on the computer, it says it's out yesterday or today. No, it's not. I understand it's August. The stock's up 5 cents at 187. I think the stock's going to pop out of here at some point. This is a geospatial. It's almost similar to Big Bear, but it's not exactly. But I can see the two of them together. But we just added this one. What was it? $1.25, $1.30. Pretty much nailed the low on it. But again, it's a back burner, just very, very tiny position. We'll see how it works out. Maybe add to on dips. Actually, what we've had today could be viewed as being okay for that purpose. Hard to say. Quantum computing, which may be present at the show in Munich, which begins today, might be more interesting as far as a midday buy. Chevron down 70 cents. I'm only going to look at a couple more. Delta, you've heard only glowing things in the media. You've heard it from us for a longer period of time. My favorite airline, up 245. Disney, which I'm not a big fan of, up 50 cents. Google, down 15 cents. Little tiny LightPath, up 4 cents. This needs to get to the point of announcing a product which is going to capture public attention, like thermal imaging or something related to a major low Earth orbit satellite constellation network, and then it can pop as well, but hasn't happened yet. Meta is up almost $8. Microsoft is up $4. Oracle's up $1.25. I mentioned quantum computing at 129. It's down 4 cents. Notice how it pops in the morning, 139. I think it's probably pops this afternoon. So if one wants it has no position, it's back down to our initial buy area. So I'm suspecting that 860,000 shares traded. I'm just thinking it's probably a reasonable bet to buy a little bit of it here. SoundHound was a reasonable bet to buy on the dips each morning. It's at 440, up 35 cents. It popped yesterday morning, dropped down, never really came back, dropped a little lower. This morning, I thought it would turn around. It did. Got down to 390. It's now 10% higher or more, 440. So that's the breakout above the 420s. Can it build on that and do the 450s? I don't know. It's going to take buyers because there's not that many shorts that are left in the stock. It traded an incredible 40 million or more shares of stock yesterday. Huge share. Some of that has to do with being included in the Russell. But anyway, at 15 million shares traded today, so we're going on a run rate of probably 25 million shares today. Still incredible, enormous, eats up the old supply of stock, has fresh holders in it. And when people say, well, it's only back to where it was in February before it dove, and we were buyers under 2, as you may recall. So we hold it strongly. We buy a little bit more on dips, and we think it goes to double, triple, or even more in the fullness of time if they execute as they have outlined. And that's why I put it that way, because go back to when it was at this price in February before we were in the stock. Again, we're in under $2. But when it was last at this price area, the fundamentals were not as clearly known as they are now. The restructuring was barely completed in terms of layoffs, in terms of cost cutting, in terms of new financing, and in terms of some of the new deals, such as 10 automakers that they have now. So I think the stock can pop from here, and I think that it's cheaper valuation-wise now in the 4s than it was last time in the 4s. And I think once it gets above 5, it's going to be easier to get it from 5 to 10 than it was from 2 to 5. And that's because you'll have more fund interest in the stock. And you already have some of that. So we will see how that goes. Gives you enough of a hint for the day. Tesla up 470. Texas Instruments up 550. That's an old hold of ours. No one will believe it, since $11 a share initially. And Wolfspeed up $3.50 today, which is a potential contract in the making for AEHR, given the funding that they got, which was the media talked about yesterday, which will help expand their Mohawk Valley facility, not just North Carolina. Have a good afternoon. Back later. Cheers.